Hi, and welcome to today's class, where we will be covering the stages of the audit process. As the diagram shows, these are the common stages of an audit. We have client acceptance, engagement letter, which follows the development of the audit plan. We ask the question, will there be reliance on internal controls? We identify and document all internal controls, and we perform a preliminary evaluation of internal controls. We identify the weaknesses in this and list the internal controls on which reliance is placed. We then complete the compliance tests of control and evaluate these results and decide whether to rely on internal controls for the substantive testing program. There are different approaches to the stages of an audit. The compliance approach means we will be relying on internal controls. There will be a minimum account balance testing, whereas the substantive approach means we design and perform substantive testing, and we perform extensive accounts balance testing, a substantive and an analytical review. Or alternatively, there's a combined compliance approach and substantive approach, where we design and perform compliance and substantive testing. From here, we move to the completion stage, and we ask the question, does the evidence constitute sufficient appropriate evidence to support an audit opinion? We then issue the audit report. We will look at the following stages chapter by chapter. We will look at the client acceptance, engagement letter. We will look at developing an audit plan, performing preliminary evaluation of internal controls, followed by compliance testing, substantive testing, and reporting. Audit approach may include looking at each subsystem, looking at accounts receivable, accounts payable, cash and inventories, payroll, intangibles, fixed asset, shareholders' funds, investments or deferred liabilities. Alternatively, a transaction cycle approach, where we look specifically at sales, purchases, receipts and payments. Many items will sit within the two subsystems. It is from this the audit is designed once we are aware of the reliability of internal controls and the company structure. We also need to consider the risk in the various subsystems. There are three types of risks. There is inherent risk, which is the likelihood of material misstatement of an assertion, assuming no related internal control. There is control risk, which is the likelihood of material misstatement will not be prevented or detected on a timely basis by the internal control. And there is also detection risk, which is the likelihood that an auditor's procedures lead to an improper conclusion that no material misstatements exist in an assertion when in fact they do. So essentially this is how the audit model will appear. You plan the audit, you obtain an understanding of the client and their environment, including their internal controls. We assess the risks of misstatement and design further tests, and then subsequently perform tests of these controls. We perform substantive procedures and complete and issue the audit report. So in summary, the main stages of an audit include 1. The acceptance of a new client. 2. The preparation of an engagement letter, which sets out the agreement between we as auditors and the client. The planning stage, where we gain an understanding of the client and the industry and make our initial risk assessment. 4. Study of internal controls, including compliance testing. So how much reliance will we actually place on their internal controls? 5. Substantive testing. 6. Completion, where we review events subsequent to balance day. And 7. The audit report and the issuance of. And these are the questions we will complete within class. Thank you for your time.